Welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from a beautiful Westlake Village, California. And guess what? In the face of the banking crisis, Bitcoin showed himself strong. It's up 75% this year. And, you know, we've always known there was a banking crisis, right? We've always known that they're robbing Peter to pay Paul. If all of the depositors went to the bank and asked for their money, it ain't there. And that's why Bitcoin provides us, protection from chaos and fragility in the banking sector. So I want to be the first one to say, thank God for Bitcoin. So there's the 75% rally since January this year, up 80% off the lows. But the first thing I want to bring us attention to is I see a great example for bullish divergence, hidden bullish divergence. So what is that? Well, you use the RSI for bullish and bearish divergence. And what I see right here is 1, 2, 3 higher lows in comparison to this low versus 3 lower lows on the RSI. Identified right here. Lower low, lower low, lower low. And with the 3 drive philosophy, what you can expect is a shot back to the top side of the range. So short term, I am looking for Bitcoin to head up to the top side of the range, coming in at 28,562. Where does that get invalidated? Well, with any kind of a closure back below the range low of 27,742. So short term does look like Bitcoin wants to play out a bit of a bounce. Okay. And what's important here is this could bleed on in to the higher term time frames. And what am I talking about? And by the way, if you want to learn about bullish and bearish divergence, well, you can go to the Bitcoin Advisors Resource Center right here. There is a bit of a cheat sheet, and it explains what traditional bullish divergence is, traditional bearish divergence, and then the hidden divergences, and some of the philosophies and price targets that you can derive from these divergences. And yeah, I just thought I'd share that with you guys. Anyways, back on to our charts here. And we're saying, hey, if momentum does flip to the upside for the 4-hour time frame, by closing, it looks like, back above this region right here. I mean, that will goose the odds on the daily time frame for a flip back to the upside. And daily stokes will cross up above 28,447. So something to note is that CMEs are going to close today. There's no trading tomorrow. It is Easter weekend. So is Bitcoin going to rise like Jesus from the grave over the weekend? Well, we hope so. We sure hope so, because price action can be a bit untrustworthy over the weekend. And I do want to throw up the Gaussian channel for the weekly closure here on CMEs and just see where we are at. And we are still closing above the mean band, which we're saying, hey, look, as long as we're closing above the mean band, well, price likely to glide its way onwards and upwards to 32,145. Spot price action again. Are we going to get another indecision candle? And what is going to be the next catalyst for Bitcoin to rocket to the moon? And I do think there are 3 reasons why Bitcoin could perhaps hit around 180,000 over the next 12 to 24 months. And one of the reasons is the Bitcoin halving cycle. We are exactly 1 year away from the 4th halving in Bitcoin's history. And this chart doesn't do a good picture of it, but typically the bull market starts 1 year prior to the halving cycle. 1 year prior to the halving cycle. And I'll draw it out on another price chart, maybe sometime later this week. But we are pretty much right here when it comes to price action. We are 1 year away from the April 2024 halving. So not only do we have that, we got the banks failing, the bailout money coming, the BRICS nations all denouncing the dollar. More and more countries every day, they are starting to denounce the dollar. So I think that's in our corner. Plus, my philosophy with this whole central bank digital currency thing is that it is going to drive more people to buy Bitcoin than ever before. That will be the catalyst that ultimately drives user demand and adoption through the roof. I think CBDC is going to be the next best thing for Bitcoin because more and more people are going to realize, look, I'm not going for the whole full-blown communism thing. I don't want the government in every pocket that I have. And just back onto the short-term analysis here. If we do begin to close 4 hours above the top side of the range or above the Gaussian channel right here, that will goose the odds in the favor of the bulls. Daily Stokes will flip back up, as we can see here, above 24.4 today. And we could begin to see volatility expand. Now, the other thing that can happen, we could dance around here and volatility could get really compressed. And then we get that next 20% move, which is going to be to the upside or to the downside. 20% low volatility on the daily time frame typically results in a 20% move in either direction. Now, oddly enough, where does 20% put us to the upside from right here? 20% takes us up to 33,000. 20% to the downside takes us to 22.5. So pretty big range there. And ultimately, I'm goosed in the favor of the bulls still right now. 2-day time frame says sell. 3-day time frame says we're going to get one more split higher. The 4-day time frame is still looking like it can hold on to its chinny chin chin before the house gets blown down. 4 days going to close today, and momentum flips to the downside below 28,236. So we need that little pump at the end of the day today. Well, yeah, that's about it out of me today, guys. I think that is it. Ethereum looking bullish on the 4-hour time frame. You have this little inverted kind of head and shoulders pattern. It's even on the daily a little bit more. You got shoulder, head, shoulder, and as long as we don't get invalidated and really close, I'd say back below 1789, well, this would imply a nice little target for Ethereum back to, call it the range highs, the previous range high, which would be, let's see. I mean, that's a pretty girthy target, all the way up to 23,555. You know, invalidation actually gets taken out below the prior shoulder. So if this shoulder gets taken out on the daily time frame back below 1700, that will not look good for Ethereum. All right, that is it. Oh yeah, short-term gold and silver look to be ready to pull back. Not quite ready to bust on through the major targets. Ethereum, actually, I'm sorry, silver has more to go, but gold looks like it's ready to pull back. If I had to close the week here on gold, well, what am I saying? That's continuation. What am I talking about? The daily time frame says short-term pullback. If we confirm this as a high, you will have, well, no bearish divergence there. Coming back from here. Hidden divergences. You know, it's a bit hard to tell with gold and silver right now. But unless there's another major economic impact in the dollar, really what I want to see for gold to bust 2,000 an ounce is you want to see the dollar close below this level at 101. the dollar is still playing inversely to gold, not really to Bitcoin. And I do think it has another leg down, which does goose the odds in the favor of the bulls for Bitcoin and the bulls for gold. If we do take out this low, I would suspect that gold does bust on through a little bit higher. And for me, I like silver right now. Why? Because, well, the range highs on silver coming in at 29, which we are a healthy 20% away from there, versus gold. The range highs, we're pretty much at the range highs. $2,073. So silver follows gold with more gains. Definitely want to be keeping an eye out on these guys as people are flocking, like I said, with the banking crisis, looming recession, dollar inflating to nothing, central bank digital currency, kind of the perfect storm for Bitcoin to really get its legs and fly and continue to show himself strong in the face of adversity. The Federal, it's pretty crazy just to think that the whole world economy is in the hands of Janet Yellen, Jerome Powell, and Joe Biden. But thank God for Bitcoin. That's it for today, guys. Have a blessed and highly favored day, and I will see you tomorrow.